Welcome to the Financial Accounting Mastery Program by Genius App. In this video, we're going to be introducing financial accounting. So we're going to speak about what financial accounting actually is, why businesses need financial reporting, and what is the conceptual framework and why does the conceptual framework exist. And then we're going to chat about the objective of financial reporting and the qualitative characteristics of useful information. So you might not know some of the things that I hear, but in this lesson I aim to basically unpack everything so that by the end of this lesson you have a clear picture of what is financial accounting or financial reporting. So let's start by explaining what financial accounting is. So financial accounting is basically a system that businesses use to record financial transactions. It's useful to summarize financial information. So businesses always have to basically report their financial position and financial performance, right? So we're going to chat deeply about what those two terms mean as we progress. But in simple terms, we're basically saying that financial accounting tells the financial story of a business, because a business has financial transactions every day. So financial accounting is there to tell the financial story of a business. So when do companies report their results, right? You might be asking yourself, when do companies have to tell the story? And businesses operate continuously, right? But financial performance need to be measured over a specific period of time, right? So which is what we call the reporting period. So it's basically a time frame for which financial statements are prepared. So a reporting period is basically a time frame in which we tell the financial story of the business for that specific period. So common reporting periods are usually annual reporting or once a year. So I'm going to give you an example. Let's say a company's financial year is the 1st of Jan to the 31st of December. So it always has to be 12 months, right? Because we're speaking about a financial year if they're reporting on a yearly basis. So it can be any date. You can start 1st of Feb and 31st of Jan, or it can start the 1st of March and the 28th of Feb. However, it just needs to be 12 months. So that's like a financial year. So usually companies will report their results for that specific year. Why do they have to report their results, right? So basically here we're answering the question, why does accounting exist? So let's say if you invested money in a business, you'd probably be interested in whether the business is making a profit. You'd probably be interested in what does the business own. You'll probably be interested in what does the business owe, right? And you'll probably be interested in the financial health of the business. So accounting basically exists to answer these questions. So for that specific reporting period, if it's a year, we're basically trying to answer this question. Is the business making a profit? What does the business own? Or what does the business owe, right? We're basically trying to answer this question with accounting. So I really want you to understand this core terms such as the reporting period and the reason why we basically have financial accounting. So who uses accounting information? Why does a business always have to tell this financial story or have to report their information? So there are many entities that rely on financial information, but a few that we can list here is investors, is banks, is managers, is the government. So for investors, we want to know as an investor whether this company is a good investment or not, right? If we want to invest in companies, we want to know whether it's making a profit, what does it owe, how much does it owe. Like, we basically have to understand the financial performance and position of the business before we invest in it. And banks, if we go to the bank as a company, the bank has to basically have a clue whether we'll be able to pay back the loan if we went there to basically ask for a loan, right? So the bank needs that financial information to make or assess whether we can be able to pay back the loan. And managers usually to make like decisions about, okay, cool, are we being profitable? What can we change? All those kind of things. The government usually uses our financial statements to basically calculate the tax that we owe to them. So there are many entities that basically use the financial statement, but these are the core users, if I may say, right? So now imagine if every company reported financial information however they wanted. That would be pointless, because as an investor, you wouldn't know which company to invest in, you wouldn't know how they prepare their financial statements, and you wouldn't understand basically the financial information, and that financial information would be useless because you don't understand it. So hence why we have what you call the conceptual framework. So the conceptual framework is basically a set of principles that explain how financial reporting should work. So conceptual framework basically explains how financial reporting should work. So you should think of it as like the foundation, as the guidebook behind accounting standards. So I didn't want to say it's a rule book, because these are not rules. These are like principles that you can use as guidance to prepare your financial statements, but they're not set in stone. They're not rules. They basically are principles or a guide for you to prepare financial statements. But usually the conceptual framework, as a foundation, it guides the development of accounting standards like the IFRS, right? So as you progress in your accounting studies, you'll probably go deeper into specific standards such as the revenue standard, the different types of asset standards, right? So basically the conceptual framework is the foundation that leads to all this standards. So standards are basically an in-depth guidance in a specific type of transaction. However, they all stem from the conceptual framework. So we really need to understand the conceptual framework before we can understand the accounting standards or the IFRS standards, right? So I want you to pause this video and do research on what is the IASB, the International Accounting Standard Board. Just read about it. What is the International Accounting Standard Board? Then you'll understand what they do further. But what they do is they basically come up, or they draft the accounting standards, which is your IFRS. And your IFRS are guided by the conceptual framework, which is the foundation of accounting. And then, why the conceptual framework matters? So the conceptual framework basically helps us to ensure that the information that we present in our financial statement is useful to the investors for decision making. Remember, I said, imagine if everyone would report in their own way. We'll have an issue, because the information wouldn't be useful, because we don't know how the company is prepared. There's no like set standard that they have to follow. So we wouldn't really be able to use that information, because they're reporting however they wanted to, right? So the conceptual framework basically provides guidance on what information should be reported, how the information should be measured, and how information should be presented. So as it provides this guidance, now the information can be useful, because we know that company by company, they following this set structure to present their financial statements. So now we can understand, or we can use the financial statements better, because we understand how they were prepared, right? They were prepared using the conceptual framework as a foundation. So what is the objective of financial reporting? So financial reporting basically exists to provide useful financial information to investors, lenders, and other creditors. Remember, we said financial statements have users, right? So the entire point of financial reporting is to provide these users with useful information. Very key, that word useful. We're going to discuss it further in what makes financial statements useful, or financial information useful, in the coming slides. However, for now, we need to understand or know that the objective of financial reporting is to provide useful information, or useful financial information, to investors, lenders, and other creditors. Why? Because these users basically use the financial statements to make investing decisions, whether to invest in a company or not, whether to lend the company money or not, whether to allocate resources or to the company, right? So this is the objective of financial reporting. Now let's speak about, we said the whole objective is to provide useful financial information, but what makes information useful? What makes financial information useful? That's where we have your qualitative characteristics. So for financial information to be useful, it must have these characteristics. Or let me just say, this one, it's a must. These two, they are a must. must. If one of these characteristics is not met when you prepare financial statements, then you're not providing useful information, meaning that your financial statements are basically useless, right? And so this is what we call fundamental qualities. So fundamental qualities, they have to be there, they must be there for the information to be useful, or the financial information to be useful. Enhancing are nice to haves, right? But they improve quality. Nice to have, but they improve quality, right? So the fundamentals, they're really important, because if they're not there, the financial statements are not useful. Enhancing characteristics or qualities that enhance the value or the usefulness of the financial information. So basically, if your financial statements encompasses these characteristics, then you would have provided useful information. This one I must have, this one they improve the quality. So let's just explain them briefly. Relevance basically means that the information that you provide must help the users to make a decision, right? If the information that you provide doesn't really help users to make a decision, then it's not useful information, right? It's not useful information. So that's relevance. Relevance is basically the information that you provide must help users to make a decision. Faithful representation basically means the information must be accurate, or it must represent reality, meaning that it is complete, it is neutral, meaning it has no bias, and it is free from error. So that's what makes the information faithfully represented, right? Meaning that it's complete, it's neutral, and it's free from error. And when we go to enhancing qualities, the first one is comparable, meaning that if we take the financial statements of one company, we must be able to compare it to another company, right? So that's like comparable. And also we must be able to compare it over time, meaning that if we take financial statements for the past 3 years and put them side by side, we must be able to compare them, meaning that the standard that you use to prepare financial statements must basically be the same with how international companies are basically reporting their information, following the guidance of the conceptual framework and the standards. And also how you report over time must also be comparable. Number 2 is it must be verifiable, meaning that if we were to take 2 experts and say, investigate this financial information, they would reach the same conclusion, right? Or this specific transaction, they reach the same conclusion. That's verifiable, meaning that 2 experts can basically reach the same conclusion given the same piece of information that you presented. And then we have timely, meaning that your financial statements must come in a timely way. You can't report for 2010, 10 years later. That information will no longer be useful. So you must ensure that each and every year your financial statements, they come in a timely manner. Within 6 months or within a short space of time after the financial year end, at least you should present your financial statements, because then that information will still be new, relevant, and useful, right? Or let me just say useful, not relevant, because relevant is a fundamental quality. Number 4 is the information must be understandable. You can't be a South African company and then you report your financial statements in Chinese, right? It won't be understandable, meaning that you really not providing us with useful information as South Africans if you're operating in South Africa. So that's the idea of enhancing qualities. They enhance the quality of the financial statements, and fundamental qualities, they must be there, right? Because if they're not there, that means the information that you provided is not useful. So the key takeaways from this lesson is the conceptual framework is the foundation of financial reporting, right? It's the foundation. It explains why financial reporting exists, who financial reporting is for, and what makes financial information useful. It ensures that the financial statements are useful for decision making. Remember, we said the entire point of financial reporting is to provide useful information to the users of the financial statements. And what makes information useful is it must have these qualitative characteristics, meaning that it must be relevant and it must be faithfully represented. Those are your fundamental qualities. They must be there. And enhancing qualities are comparable, verifiable, timely, and understandable. So those are your enhancing qualities. So these qualities are what makes information useful, these qualitative characteristics. So we basically concluded the introduction on financial reporting. I hope it makes sense. So basically, to summarize the lesson, is in this lesson we covered what financial accounting is, why financial reporting exists, the purpose of the conceptual framework, the objective of financial reporting, and the qualitative characteristics of useful information. You now understand the financial or the foundation of financial reporting. So if you have any question, make sure you drop them in the group that we have, or you can drop them in the comment section. And if you need further support, make sure that you basically go to the link that's in the description of this video,